Needless to say, there was a volatile reaction to the news in markets on Friday. Friday was one of the most volatile days since 2009. Largely, Monday started relatively quietly. Volatility has picked up a little bit throughout the day, but it's fair to say that thus far the reaction has not been as bad as it could have been. To put it into context, a lot of markets are trading at levels they've already been at in 2016. Now, partly that was because they ran up into the vote. And the FTSE 100, the index of the 100 largest companies in the UK, has been performing quite well relatively because of the foreign earnings within those companies. The reaction in the asset classes has been largely predictable. What we expected to fall has fallen, and other asset classes have actually risen. Now, equities, it has been a negative reaction. The UK market, as I said, the headline number has not fallen as far as it could have done. The bigger reaction actually on Friday was in European markets and also in Japan. Now, in Japan this morning, there was some bounce back. In terms of assets, currencies reacted much more than equity markets. Sterling has fallen markedly on the news, and that has continued today. The euro has also fallen, but there are safe haven assets out there, and even in currencies, not all currencies can fall at the same rate. The US dollar has bounced, and so has the yen. Now, that might create some issue for those economies, and it might impact growth and the outlook for policy in the US. But the reaction thus far hasn't been that marked. Government bonds are often seen as a safe haven at these times, and there the yield has fallen and the price has risen. Gold also is seen as a store of value, and the gold price has moved probably around 6% since the referendum result. Now, I said that the headline move in markets wasn't as great as it could have been, but that masks a bigger move within sectors in the UK. The banks have been quite hard hit. That's partly because the European passport to operate might be come into question. House builders have fallen. Consumer stocks have fallen because this might impact growth, and property stocks have also fallen. And there's been a tendency for the smaller and mid-sized companies to fall further than the large businesses with lots of different streams of income. Defensive companies have done quite well in the market move, and also dollar earners. But I think the key point to make is that volatility can be an opportunity for an investor, and this is still the early days of this issue, and it is a process, so it will play out over the coming weeks and months.